FAIRtax is coming, don't stand in the way. FAIRtax is coming across the USA. FAIRtax is coming, clean up this mess. We got to get rid of the IRS. Hey, hey! Hey, hey!
Hello and welcome once again to FAIRtax Power Radio. I'm Bob Paxton.
And I'm Ron Malero.
And we are the FAIRtax Guys. At the FAIRtax Guys at gmail.com is how you can get in touch with us if you'd like.
Yeah, I could say the world famous FAIRtax Guys, because we're on Spreaker, we're on iTunes, and any day now I'm going to get the word from iHeartRadio that we're there too. I'm still waiting as of this recording.
All right, hopefully so. But if you missed last episode, you need to go back and listen to that one, because that is actually kind of part one of a two-part series. We're taking a not so tongue-in-cheek look at some of the actual, crazy things that are in the tax code and how some people are getting a break and others aren't, and just some incredibly unbelievable things that are in there.
I know what you were going to say.
I didn't.
Yeah,
I thought it.
We have mentioned on numerous occasions how massive this tax code is. It's a behemoth. It's 75,000 pages. How did it get that way? Well, if you listen to the last program, you'll get a pretty good idea of how it got like that. It's by the crazy laws that are currently in the tax law.
And some of the crazy decisions that the tax courts have made.
That's right.
I say we did know, credit where it's due, there have been occasions where the IRS did come down on the side of sanity, and the tax court ruled it the other way.
Yep. Yeah, it's hard to believe. So it's not all the IRS's fault. But then, when the tax court rules, the IRS has to enforce it.
Yeah, and that becomes part of the 75,000 plus pages of code and supporting regulations that, as you mentioned last time, the IRS says it's complex, and in order to understand any piece of it, you have to understand it in context, i.e. you have to know the whole law. And we've documented several times how even the tax professionals can't do that.
Oh, yeah. No one person can possibly understand this entire tax code, which that in itself is reason enough to get rid of it. All right? Get rid of it, pull it out by the roots, as Bob says, and replace it with the fair tax. That's what we're all about.
That's what we're all about. Again, last program, we looked at stuff that actually is in the tax code that the lobbyists and lawyers have already gotten through.
Yeah.
Today, we're going to look at some of the really crazy propositions that are still being considered that aren't there yet, but if the politicians and lobbyists get their way, they will be, and again, we'll never be none the wiser because nobody's paying attention to what they're doing.
Well, I've got one here that I can get behind. I finally found a proposed tax deduction that I can get behind. Bob, did you know that the golf industry is a $70 billion annual industry in this country?
I did not, but I do now.
Yeah, $70 billion. And there are golf lobbyists in Washington as we speak, and they're trying to get golf included in the FIT Act, Personal Health Investment Today Act. The FIT Act expands the IRS definition of a medical expense to allow for medical care tax treatment of qualified fitness and sport expenses.
Wait a minute. I think I know where this is going.
Oh, well, you have to get behind this one. It only makes sense. So what they're talking about is that because people, they're golfing and they're getting out of the house and they're exercising. And I can tell you, when I go to the driving range, I'm exercising because you're hitting a ball about once a minute instead of once every 15 minutes like you are in the course. And so all this exercise and everything in the golf clubs, yes, indeed, the lobbyists are out there and they're trying to get golf included in the FIT Act, which would make golf camps, clinics, lessons, training aids, greens fees, driving range fees, tournament fees, and, yes, indeed, golf balls and golf clubs tax deductible up to $1,000 for an individual or $2,000 for the head of a household. Now, I think we need to get behind this. I mean, this only makes sense.
I think that sucks. I don't play golf.
Wait a minute.
I wanted exemption for my bowling balls and my bowling shoes and my bowling gloves and my bowling game. Is there one of those?
Well, I don't see that in here, but I can't believe you're not going to get behind this with me.
I can't believe that you golfers are getting a break that we bowlers aren't. That's no fair.
Well, maybe when they put the golf in there, maybe they'll go after the bowling too. Anyways, folks, is there anyone?
Are we still going to be friends when this is over with?
Well,
not if you get your exemption and I don't get mine.
Well, hopefully we're not going to get any of these exemptions. But you can see how people make the argument, the lobbyists, the people, on K Street in Washington, this is what they do for a living. They take the Congress people, the Congress critters out to lunch, and they wine them and dine them, and they make these tremendous oh, yes, Mr. Congressman, you have to include golf in there. We have to make our clubs and golf balls and training lessons and all this stuff deductible expenses. I mean, I do play golf. My wife and I enjoy it when we're able to get out. But this is ridiculous. We can't expand the code like this. This is nuts. And again, if the golfers get a deduction, that means they're paying less taxes. Other people have to make up for it. Again, and the fact that we're
discriminating against the bowlers.
We're discriminating against everybody, actually. Everybody else that pays taxes. But those lobbyists for the golf industry will be out there and earning their six-figure salaries, trying to get these big deductions for the golf industry. And as much as I like golf, I don't like this idea. I mean, because it really hurts everybody. It makes how many more pages are going to be added to the tax code if we get golf included as in the FIT program?
Yeah, and if you get golf in there, then the baseball folks will follow, softball folks will follow, downhill skiing. I bet you somebody could figure out how to make it deductible to go stock car racing at your local track. It's just a can of worms. As soon as you open it, then in comes God knows how much more other junk.
Oh, and those lobbyists are very good at what they do.
Uh-huh.
If they get their foot in the door with golf, you better believe the tennis people will be in there. Because they run around like nuts on the court.
Uh-huh.
Soccer
and football, the whole 9 yards. And
Absolutely.
I guarantee you, if we got a flat tax and all that stuff went away, that means the lobbyists, the politicians get to sell all those deductions all over again.
Yeah, and they will be back there. Those lobbyists will not go away unless we get rid of the income tax and replace it with the fair tax, which is a consumption tax.
If we change the system so that it is no longer open to them to manipulate like that, that'll work. But I'll tell you what, okay, Ron, we will still be friends at least for the next 20, 30 minutes here while we do the rest of the show.
Right.
Because we do have some more crazy things that are under proposal that are actually bills in Congress right now, and I've got the first one. It's called H.R. 780. Amends the Internal Revenue Code of 1986 to provide for offsetting certain past due local tax debts against income tax overpayment. So what that means, and I could read you the whole lawyerese gobbledygook here, but what they are trying to do, Representative Gerald Conley of Virginia is sponsoring this law, which will basically make the IRS a collection agent for local governments.
Yeah.
So if you're behind on your property taxes, or if you're behind on some other kind of state or local tax that you haven't paid, the local agency can tell on you to the IRS, and then this law will say, all right, we'll just deduct that past due tax bill from this guy's income tax deduction, and the Internal Revenue Service, in effect, becomes a collection agency for every other taxing authority in the country, and I don't think that's a good idea at all.
Oh, that's just what we need, isn't it? I mean, how many more IRS agents would they have to hire in order to do this? And you're going to go put the IRS in cahoots with local governments. All right, it's bad enough that the IRS completely ignores the Bill of Rights. Now you're going to give them more reasons to ignore the Bill of Rights.
Yeah, we're going to get into that a bit later at the end of this show.
Yeah.
So have you got another one over there?
Oh, let's see here. Well, this one kind of goes along. This one is S-386 by Senator John Thune. And again, the description of it is rather, lengthy and legalese. Employees living in one state but working in another state, this IRS law. Now, this is, again, a proposal to change the IRS code, the tax code. It would say that people living in one state but working in another state can only be charged state income tax by one of those states, not both. Now, why would we want the IRS to get involved with collecting state income tax? I mean, how does this? Why don't we let the states take care of that? I guess because it's across state lines, it has to be a federal agency. But this is what he's talking about. This is going to add more pages. And again, here's another aspect of it. If we get rid of the income tax at the federal level, what do you think is going to happen to the states, especially the states that have both income and sales tax? Chances are they're going to get rid of their income tax. Bob, have you lived in a state that has an income tax?
I have. I lived in North Carolina before I moved to Florida.
So, and basically, when you filled out your state income tax form, you used your figures from your federal 1040, correct?
Oh, that was back in the Stone Age, but yeah, I think it was about like that.
Yeah, because I know when I lived in New York, that's exactly what we did. Well, if the federal government doesn't have a 1040, then what are the states going to do? How are they going to document? So,
oops.
Yeah. Oops is right. This could have a very positive ripple effect if the federal government gets rid of the income tax and replaces it with the fair tax. Then chances are we're going to see a number of states do that too, and enhance their sales tax, make it more universal, and get rid of their income tax. So otherwise, we're going to have things like this where the federal government has to get involved with the states for people who are living in one state and working in another state, and both states are trying to charge them income tax. Let's get rid of it altogether, and none of that will be necessary.
Okay, let me look at another one here. This will be H.R. 1223. Now, this is actually one that makes a lot of sense. Now, listen, starting off, a valid Social Security number is necessary in order to claim the Earned Income Tax Credit. And H.R. 1233 says that they want to amend the Internal Revenue Service Code to deny an Earned Income Tax Credit for a taxpayer for years prior to their receiving a Social Security card. Yeah, so if you've got a Social Security card, if you got your Social Security number this year, this bill is saying you cannot back up and claim the Earned Income Credit for last year or the year before, a year before that. That's a wonderful idea, but that raises the question, why are they doing it now? Why is this even necessary? This falls under the duh department.
Yeah. So obviously, if it's somebody, an adult who's just getting their Social Security number for the first time, they're an immigrant, okay? And let's assume they're a legal immigrant. Well, that's good. I mean, my parents and grandparents were legal immigrants. I have no problem with that. We welcome people from other countries if they can contribute to our country. And they need to get a Social Security number, become legal. But when they become legal, when they actually become citizens, then they could take advantage of the tax codes, the loopholes, you might say. And that earned income tax credit is one of those loopholes. Not prior to that. Not before they actually become legal.
But the fact that this is being proposed tells you that people are going back retroactively and claiming tax credits to which they really are not entitled.
Yeah.
So why is this happening to begin with? Why do we need this fix? Because the system is so complex that nobody understands it, and it's so you can get away with just about anything under the current tax code, which is why we need to get rid of it entirely.
Bob is absolutely right. If somebody is proposing that law, it's because there are people out there who are abusing the system, and they are getting the Earned Income Tax Credit when they're not legal citizens, or they're trying to get it for prior years before they became legal citizens. So Bob is absolutely right. That indicates that there's a problem here now.
So kudos to Representative Jeff Fortenberry of Nebraska, who is proposing this H.R. 1223, but he should never have to do this because the fix that he is proposing should never have been broken in the first place.
Yeah, that's right. And it's only made possible because of this extremely complicated and cumbersome tax code.
Which we need to get rid of, and we will.
Yeah.
What else you got?
Okay, this one is H.R. 902, Earned Income Tax Credit Improvement and Simplification. All right, this is by Representative Richard Neal of Massachusetts. Now, what it does is it expands the Earned Income Tax Credit to include more people and allow, now get this one, I love this last part here, allow a person who has low wages but high dividends to still get the Earned Income Tax Credit.
You mean somebody like Warren Buffett who lives off investment income rather than a salary?
I think that would, I think that would fit the bill there, because that's what it says. It would let people who get low wages or maybe no wages, they don't get a paycheck, they don't get a W-2, but they've got money invested in places and they get money from dividends. And because they're getting low or no wages, he wants them to get the Earned Income Tax Credit. Wait a minute. Shouldn't there be some means testing here? I mean, are we going to hand out the Earned Income Tax Credit to everybody? I mean, think of the ridiculousness of that. If you cut the tax burden of everybody, who's going to be paying taxes? So this one, this goes in the other pile, Bob. This is, we don't recommend this one. But it is a proposal, and it's there right now. And I didn't write down when I recorded these if it has any co-sponsors. Some of these only have the sponsor, and that's it. I hope that's one of them.
All right. Well, this is another one under why is this even necessary? The H.R. 1817, the No Bonuses for Tax Delinquent IRS Employees Act 2015, sponsored by Representative Sam Johnson of Texas. And it pretty much says in plain language that if the IRS is not allowed to give a performance award, that would be bonuses or step increases, time off, anything like that, to an employee of the IRS who owes an outstanding federal tax debt.
Wait a minute.
Why are those people getting bonuses to begin with?
Doesn't common sense exist?
Another fix for a problem that should never have happened in the first place. So it's good that this guy's trying to fix it, but it's awful that the system allows this abuse to begin with.
Don't you have to wonder that if you ever were audited, you'd be wondering if the person from the IRS who's auditing you, did they pay their taxes? Are they getting their paycheck even though they owe back taxes? I mean, that's entirely possible. Because, as Bob said, the reason this is being proposed is because it's being abused right now.
The system is so rife with abuses, and nobody's keeping an eye on it.
Yeah.
And we need to get rid of it. It's that simple. You need to get rid of the whole thing.
So kudos to Representative Sam Johnson of Texas for actually putting that out there. I mean, it's sad that he has to, but at least he's doing it.
Well, I got another one that kind of falls into the same category here. This is H.R. 709, Preventing the Targeting at the IRS Act, from Representative James Renacci of Ohio. It amends the IRS Restructuring and Reform Act to expand existing grounds for termination of the employment of an Internal Revenue Service employee that goes the thing just came out. They come over 400 organizations were targeted for a high scrutiny because the IRS didn't like their, the political affiliation that they were leaning on. And again, that should never happen. You should never have to have a bill that says you can't do this, because you should never be doing it in the first place.
Yeah, that's right. And Bob, again, you have to ask, if somebody's proposing this, why are they proposing it? Because it's being abused. Because IRS agents are targeting groups that they don't agree with. And it's been going on. And it took the IRS 3 years to give that list of over 400, almost 500 organizations that were targeted by the IRS. 3 years of stonewalling.
Yeah, and there were key words in there that they were looking for. And again, we're trying not to take sides and be political here, but it was all conservative, and they had the word T or the word Constitution or the word liberty or something like that. That got you targeted. Yeah,
that's true. That's true. And I know it's easy to say, but if the shoe was on the other foot, if we had if there were other groups with a different affiliation being targeted by the IRS, we'd be complaining about that too.
It's just as wrong to target liberal ones for their ideology as it is for conservative. The IRS should not be doing that to anybody.
No, nobody. The IRS is supposed to collect taxes. It's that simple. They're not supposed to target people. So, okay. All right.
You got a really good one over there if I've snuck through your list before the show here.
Yeah.
This goes right along with what we're talking about here.
We didn't do S-686, did we?
I don't think so.
A bill to amend the internal tax, no, they always say the Internal Revenue Code of 1986 to provide for a limitation on certain aliens from claiming the earned income tax credit. Say what? Prevents an alien who has been, now get this, who has been granted deferred action from removal. So
that means they're not going to deport them.
Can we say it's an illegal alien and they've got action against them to remove them, and for some reason there's deferred action? Okay. Well, this bill would, if it was enacted, would remove the capability of that person from getting the earned income tax credit for years prior to that, or while they were here illegally. All right, before they were discovered to be illegal.
Things that shouldn't be happening in the first place now requires a fix.
Yeah, so again, the reason this is being proposed by Senator Charles Grassley of Iowa, and the reason it's being proposed is because it's being abused.
All right.
It's that simple.
All right.
So
we want to get on and talk about the Bill of Rights and how the IRS abuses and just runs roughshod over the Bill of Rights. You got one more over there that kind of leads into this.
Yeah. This one, I got to get this one in, all right? The Volunteer Income Tax Assistant Program. All right, very simply, this is by Representative Michael Honda of California. He wants to create a new bureaucracy that will train volunteers to help low-income and, how do they put it, underserved populations fill out their tax returns. All right, so he wants to create a new bureaucracy so to help people who can't figure it out to fill out their tax returns. Hey, I got an idea. Let's get rid of the tax returns.
Yeah, why don't we just get rid of the tax returns, and that's totally unnecessary.
Oh boy. That's a little crazy. I mean, you can see how all this stuff just makes a mess. Just makes a mess. And finally, there's one last one.
This is the one I was thinking about.
Yep. Congressman Peter Roskam of Illinois has introduced H.R. 5053. Preventing the IRS Abuse and Protecting Free Speech Act. Why do we have to have another law to prevent IRS abuse and to protect our free speech rights? Why is that? Well, it's because the IRS is legally allowed to ignore our Bill of Rights, okay? Yep. Remember the Bill of Rights. The Bill of Rights came about because when the Constitution was ratified, in fact, George Mason stormed out. He was not going to have any part of the Constitution unless it had a Bill of Rights. And so the people who voted on the Constitution agreed, okay, the first time we meet, we're going to adopt a Bill of Rights that protects personal freedoms. And they're going to spell it out in detail, what it protects. The Constitution basically forbids the government from doing a lot of stupid things. And unfortunately, over the past 200 years, they've found a way to get around that. But the Bill of Rights protects us. Amendment 1 protects the freedom of religion and the freedom of speech, freedom of the press, and the right of the people to peaceably assemble and to petition the government for redress of grievances. Now, how many times does the IRS get involved in a religious organization?
Oh, they tell them what they can and can't say.
Yeah, and challenges their
tax exempt status.
Yeah, thank you. Tax exempt status. All right.
So that violates the freedom of religion. It violates the freedom of speech.
Yeah,
and they get away with it.
And they get away with it because Congress has allowed them to do this. All right. Now let's skip down to Amendment 4. This protects the people against unreasonable searches and seizures. And no issues will be issued. No warrants will be issued except on probable cause. Well, we've talked about on numerous occasions the asset forfeiture, civil asset forfeiture, where the IRS comes and confiscates your bank account. And I'll use the example. You can go on YouTube and look up Carol Hinders. There's a short 2-minute video on what she went through. She runs a little cash-only restaurant, cash only, and she makes these deposits. Well, I found out through somebody who used to work in the bank, if a bank teller sees these cash deposits and is suspicious about them, the bank teller is allowed, probably encouraged, to notify the IRS, hey, this person is making these cash deposits. Because if you deposit more than $10,000, you have to report it to the IRS. If you deposit less than $10,000, so there are some unscrupulous people, like maybe drug dealers, that try to deposit it in maybe $2,000 or $3,000 increments to avoid the $10,000 rule. But Carol Hindus is running a little restaurant, and she doesn't take credit cards. She only takes cash. So she makes these deposits, and some poor unknowing teller turned her in. IRS comes in, confiscates, freezes her bank account, and she's got over $30,000 she can't access. Okay. How is she supposed to run her business?
That was the part of the loop that I couldn't connect. Or how did the IRS know that these little under $10,000 deposits were taking place if the IRS was not looking at everybody's deposit activity? And it turns out that they've turned the bank tellers of the country into snitches for themselves.
Yeah, that's about it.
So that's how they figured it out. I couldn't for the life of me figure out how they knew that this lady was depositing $8,000 one day and $7,000 a couple of days later. How would they know that unless they were monitoring it? And I guess they are, but it's just not IRS agents. They've got the bank tellers themselves, as they're snoops and snitches.
And this woman who told me about this, who used to be a bank teller, said, and they don't even tell their other tellers, they don't tell their bosses, the bank president, they don't tell anybody. They just somehow fill out a form or send out an email, and they inform the IRS of these cash deposits. And that's it. And it's like Bob says, they really become snitches.
Yeah, and then the IRS steps in. Your unreasonable searches and seizure protection doesn't apply when the IRS wants your bank account if they think you're doing this. If you've been snitched on.
Out the window. All right.
Crazy. Let's go on to Amendment 5. Yep.
Then let's see. Amendment 5 talks about double jeopardy, and you can't become a witness for yourself. Again, the IRS wants all these forms and figures and so forth, and you have to testify against yourself. Amendment 6 is a speedy and public trial by an impartial jury. Well, where's the speedy and public trial when the IRS freezes your bank account and you have thousands of dollars in there? You're trying to run a business. You're trying to buy supplies for your restaurant, your convenience store, or whatever, and the IRS just froze your assets, and now you can't buy anything for your store. And this has happened to hundreds and hundreds of people to the tune of millions and millions of dollars. The Bill of Rights out the window.
Okay, one more. The 8th Amendment.
Excessive bail shall not be required, nor excessive fines imposed, nor cruel and unusual punishments inflicted.
I would say that getting your bank account swiped just because the IRS thinks you might be doing something would fall under cruel and unusual punishment. How can they get away with that?
And during an audit should be considered cruel and unusual punishment.
Yeah, we can get rid of those too.
So, anyways, but I still want that golf deduction.
I don't. I want a bowler's deduction. If you don't get yours, if you get yours, I want mine.
That's right. Well, that's only fair. Okay, listen.
Let's just get rid of the whole system. And we'll both pay our taxes pay our taxes at the cash register.
Yep. Now, folks, if you've been listening to us for a while, you get the idea that we're in favor of the fair tax. You can get more information from FAIRtax.org. You can get, we got to hurry up here because we're almost done. The webinar. Don't forget the monthly webinar, the fourth Thursday of each month. Go to FAIRtax.org/webinar. And then also get involved by going to bigsolution.org. Bigsolution.org. That's where you can help out and help us get this done.
Yeah, do not be duped into accepting a small solution for a big problem.
That's right. Yep. So only the fair tax is going to do it. And time is critical. 2016 is a big year. So let's get going.
Amen. And again, if you'd like to join Americans for Fair Taxation, we certainly encourage you to do that. If you'd like to get in touch with us here at FAIRtax Power Radio, the FAIRtax Guys at gmail.com, and also the FAIRtax Guys Facebook page as well. We'll be happy to hear from you if you would like to interact with the program.
Yep.
So that's going to wrap it up. Do it to it for this edition of Fair Tax Power Radio. Thank you so much for listening. I'm Bob Paxton.
And I'm Ron Malero.
Reminding you again, America's big solution is the fair tax, and once you understand it,
You'll demand it.
Fair tax is coming, don't stand in the way. Fair tax is coming across the USA. Fair tax is coming, clean up this mess we got to get.